Good evening, everybody. Okay, we had a request to do some talks on stocks tonight. All right. Okay, looks like we're getting some good interest again in the private sessions at Cuco Lake, which is good because I think everybody will get a lot of information and enjoy the stay there. So we've even gotten requests from people that have been there in the last few years to say, let's do a review session up here again. So we might not be able to squeeze it in this year, but that will probably be set up for next summer that we'll come back and do a review session from people that have been there before. CG, I don't know if there's a way to do that or not. So I need to put that one. Okay. As we saw, we had a nice strong move this morning, but it closed back down here and the Dow, which isn't really all that problematic, except we definitely need to stay above the T line. As long as there is still below the 50, even though we're above the T line, we're kind of at a battle here. They need to get this closed back up above the 50, mainly because the 50 had acted as support before. Now it's acting as resistance. So there's a lot more people watching the 50 than obviously watching our T line. So we need to see investor sentiment build up some steam here, where the big money people are seeing that the 50 is not acting as resistance. If the 50 continues to act as resistance, or they start selling it off from here, this is the what we have to be prepared for. So one of the questions, I know somebody was upset a while back. That we couldn't project when this big downdraft was occurring until the close, but that's not the point of investment. We're not trying to be soothsayers. We're trying to be reactionary to what is the market telling us. So right now, the market is telling us that they're having a hard time getting back up through this level, and this level right here would be very interesting or very critical, that if they can get out of this little downtrending channel, that's going to be very bullish. And see, this is what I was trying to do. If they've come up and this is a blue ice failure, we don't know whether they're going to take it this way or this way. I mean, that's not the predictive part of what we're trying to do. Part of it is being predictive, knowing which way we should be going, or what the signals are that get negated or tell us that we're not going in that direction, so we can react to it and trade in the right direction. So if we see a failure tomorrow in the markets, meaning coming back down below the T line, this could be that blue ice failure. So I say could be. If we see a failure, we need to react in that way. Let's see. Is everybody else getting echoing? Or Jim, are you in here twice? How is that a possibility? You're in here twice, Jim. Close out one of them, and you'll eliminate that echo problem. Okay. All right. So same scenario for the S&P 500. We've got this downtrending channel. We've got some good bullish action. But this bullish action still needs the confirmation that they can get back up above the T line. So number one, we do not want to see them close back below, the 50. We don't want to see any close back below the T line. That could warrant a failure of the 50, taking us down to the 200. Like to see it open positive because very simply it's going to move in the direction how they open it. And then, okay. And then the NASDAQ came right up to this level. I don't know whether I can retrace it. No, that's not what we want. That's not what we want. Pointer tools. Trend. We're getting close. So the NASDAQ would be showing good signs of confidence if we could get above that resistance level. Let's see. I don't know whether I get. Yeah, that was the Russell 2000 was more resilient, and it's right here at this getting very close to this kind of resistance level. So anyways, we're going to need to see how they open these markets tomorrow. All right, let's take a look at influences of the market. Crude oil. I don't know whether crude oil is doing anything that would warrant any concern yet. It does look like a potential bottoming action, so definitely do not want to see it start trading back up above 100. That might be another little spurt to the upside. But at these levels, going from 97 to 104, that's not a huge percentage move anymore at these prices. Oh, and the, what is it, the DJT, the transports also need a little bit more, this is CG, I'm not seeing where it broke out of this downtrending channel. I may be looking at something different than you, but it's right there. It's still in this trading range. All right. Gold. Oh, there's that little piercing signal bounce. But to show true reversal, they need to close it above the T-line. Silver, right there at the T-line, a little shooting star. So it'll be important how they open this tomorrow. What other things do we have? Coffee, bottoming, sugar. That's a good short right there. Oh, the Tran? All right. Oh, okay. Maybe I missed. Will that show up here? Okay, that does show a little bit different. I'd never look at it. But that is a good little message. When the transports are acting strong, that usually indicates the rest of the market is going to follow. So, all right. What else am I supposed to? The dollar. Dollar slow, setting up. I'm still short the Japanese yen. Better look at this one. Japanese yen getting to the oversold area, but back down below the 50. Not any buy signals yet. And what else am I? Oh, the interest rates. Interest rates trying to bottom. This is the bond prices trying to bottom, but still need to get up above the T line. And let's see, copper. Copper took a nice big bounce up, and usually copper is an indication of whether the economy is picking up, or at least the construction industry. Lots of copper in building and electrical. Natural gas still in these J-hooking to the downside. Let's make this smaller. There was a gap to fill right here, and it looks like they did come back and fill it. Yep, they just filled it. In the oversold area, I'd still want to see it close up above the T-line, though. Heating oil usually doesn't get a whole lot of activity during the summertime. That's so sideways that I wouldn't be trading that at all. Was it UUP? That's the dollar, yes. Okay. Oh, let's see. Whoops, let me see what wheat still in a downtrend, and could possibly be doing a doji sandwich. Now I say possibly because it looks like, if I can do this correctly, that our stochastics have just now gotten down into the oversold area. So it needs to start dropping. It's trading up a little bit after hours. And I think the other ones, soybeans still dropping. This is September soybeans still dropping. And trying to feeder cattle still in an uptrend, and live cattle getting a little bit soggy up here, which means it might be setting up for a J-hook pattern. And lean hogs, need to be shorted. They're probably coming back down to test the 200. Let's see, corn. Corn is still showing weakness. This is after hours trading. There's your doji sandwich. They're trading at lower. You could probably be shorting corn and soybeans. All right. Let's take a look at some of the stocks that we've been working with. YRCW has just been strong. And even ever since our little J-hook pattern, it's just been in a nice uptrend. So once it broke out through this level with a J-hook pattern, that pretty much told you where they were taking it. They were still taking it further to the upside. We recommended TEAR today because it did a little left-right combo that closed above the T-line. If it traded positive, it'd be breaking this downtrending channel, which it looks like it did, and we're getting close enough to the 50-day moving average. That's where people are probably looking to be buying. HGG with this cradle pattern, or as I call this one a cradle pattern. Anytime you have more than 2 indecisive trading days before the big up day that closes more than halfway up this candle, that to me is a morning star type signal. When you get 3 or more, then I call it a cradle pattern, but it still represents the same thing. There was days of indecision, and then they told you which way they're taking their decision. And this is definitely a chart that you could add all the factors of being in the right place at the right time. Number 1, your stochastics were close to the oversold area starting to curl up. 2, you're bouncing up off the 50. 3, you can see it's in an uptrend and it's starting back up. 4, it closed above the T-line. 5, it opened positive today. If it does a positive open tomorrow, you definitely have a doji sandwich set up, which means you got kind of a mini scoop, cradle pattern, and all the other factors. Just gives us a high probability that this one's in the right direction at the right time. Price bodes well for more smoked ribs this summer. Okay. Question about your option trades. Do you have a rule for when you close out a loser percentage? Not a percentage, no. I close out a loser when I see that the underlying stock isn't doing what it's supposed to. I'd bought the INFI calls. Now, I say close out a loser. The ones that I had were inexpensive when I bought them, so when they came down here, they were even more inexpensive. So when they're so inexpensive that, oh, shoot. Hold on, we've got people out and about. I'll be right back. Okay, sorry about that. When it's going where it shouldn't go, yes. What's inexpensive? I was buying out of the money calls, and they're so cheap when they came down here that I mean, just to even close them out, and I didn't have that big a position. But let's say they went from like 60 cents to 15 cents, and so I hardly have enough. They were a small position in the first place. Have hardly enough that if I sold them at 15 cents, I might as well hang on to them to see if this is all still bottoming action. Because if I sell, I think it was about 40 contracts for 15 cents, $600, it's probably more worthwhile just to let them sit here. But if this had been a bigger price, let's say I had bought let's say I bought the 15s and they came back down here. As soon as they closed below the T line, I would have been out of the position. Not because they were any percentage move. It's just because the chart told me that was time to be out of the trade. So a percentage move doesn't mean anything. And it shouldn't. Why should you be buying or selling something based on a percentage move? If you're buying based on what the chart action is, you should be selling based upon what the chart action is. So I hope that's all right. All right, here's one that should be definitely watched is AEGR. We had the bullish Harami in the oversold area, gap up above the T line. It stayed up above the T line. Now, somebody say, well, isn't this a bearish engulfing signal and closing below the T line? Yes, but notice where it was occurring. It was just occurring as this trend started. So this became very simple strategy or execution planning. Is this needed to open higher and trade higher to stay in it because we were in an uptrend. We had a buy signal. We're above the T line. Now, had this opened lower today, you'd closed out the position. The fact that it opened higher and traded higher was consistent with what we were expecting from this trend. Yes, there's not going to be every single day in an uptrend that it is going to go up. You're going to have down days in an uptrend. And if you have a sell signal, remember, a candlestick sell signal is not a sell signal if you're in the oversold area. All it is a formation or daily trading. Candlestick sell signal in the overbought condition has much more credibility. All right. We also have been in CSIQ. Same scenario, kind of bullish Harami gap up, scoop type action, and then positive trading that broke you out through this level. So now we can see a wave 1, a wave 2, scoop type wave 3 in action. Let's see. We did we do? I think we did HGG. Oh yes, we did that one. This one, even if you're a day trader, is a very strong trade setup because you have the signal pattern, the cradle pattern. Then you have the doji sandwich. So if it opens positive tomorrow, you want to be buying right away. CLDX was bought because all the elements were there. You had a fry pan bottom, strong price move, J-hook type pattern with a Morningstar signal. The fact that they gapped it up, where did they gap it up? They gapped it up when they were heading right toward this resistance level. That usually means they are planning to take this higher. They're not buying aggressively right at the resistance level. They're buying aggressively because they think it's going to go right through that resistance level. So anytime you see a gap up right close to a breakout and you can recognize the pattern, that's usually a good time to be buying. So that's why I bought the calls today. Still holding on to the calls because I want to see them open up positive and start our wave 3. If wave 3 is the same magnitude as this, means they should take this up into the $18.50, $19 area. And Reggie, oops. Nice fry pan bottom, breakout. Notice what it's done over the last couple of days. Use the T-line as support. Doji, this makes it very simple. If they open this positive, if you haven't bought this one yet, you want to be buying. Or if it opens positive and breaks out through this level, you want to be buying. This is what this whole message is telling us, is that they're ready to take this one higher on positive trading. That's Reggie. All right. Let's see. All right, we've got a few that are very nice fry pan bottom breakout situations. Here's OWW with Doji gap up, kind of this rounding bottom. And now we're right at the breakout point with stochastic still having a lot of juice left in it. Wouldn't be afraid to be buying this one. And that was the same with Tesla, which is much more followed. Another kind of rounding bottom, little Doji gap up through the resistance level or the last resistance level. This tells me they're probably more than likely taking this one up higher. Let's see. When doing a scan for Doji setups or to mark them on a chart, a 10-minute chart, should we care whether it is a 0.15% of the high-low or 0.05? No, just as long as you visually can see that there was indecision on this day or indecision on this day. You don't need a formula. Just look at it. Say, was this an indecisive trading day? Well, it looked like a little spinning top Doji. And what do? They open up positive. So don't get caught. Now, with your scans, I'm sure if you even use the broader number, the 15% of the total trading, it doesn't matter. You're going to find enough good good trades that you're going to have more than you're probably going to be able to handle. Let's see. The question is, doesn't Tesla have a long way to fall to support the 50 SMA? Yes, if it's going to fall. But we're buying on the basis that this pattern is telling us they're taking it higher. Stochastic's still heading up, coming out of a fry pan bottom type. It doesn't matter where the 50. We're not buying and selling the 50. We're buying and selling the price. How reliable indicators are Head and Shoulders and inverse Head and Shoulders? They're reliable, but use them as a indicator, not as a tool. See what your candlesticks are telling you, and whether it's confirming the Head and Shoulders. My signals are my first criteria. Then everything else becomes a secondary. Okay, Jeb. Yeah. Okay. We were going to do some. If you were going to put a stop on this one, if I was buying this tomorrow, why would I be buying? Because the fry pan bottom tells me I'm heading up further. So this tells me I should be in an uptrend. If they open this higher and they close more than halfway down this candle, what's that also telling us? That's telling us we're right back into this trading range that we might not be breaking out. Use the halfway point and close below the halfway point of this candle to tell us to get back out of the trade. Or if it opens higher and they have enough strength to bring it all the way back down through the previous day's open, close out the position. If this is breaking out to the upside, they definitely should not be bringing it back down here. Yes, and you can do that too. Go down to a lower time frame. That if this is moving up, you can go to your 10-minute chart, or that's a 60-minute chart. Go to your 10-minute chart. As long as it's staying above the T line. But if you see a big candlestick sell signal and it close below the, or start trading below the T line, that might tell you to take profits. What you really want to see is that it continues to move above the T line. Risk reward stinks. It could, but if you're in wave 3 and it just moved from 40 to 110, wave 3 could be going from 107 to 170. So your risk reward factor is based upon what is your upside potential on any trade. Let's see, DANG, J-hook type pattern. This wasn't your signal. This was just an up day. Now you have a bullish Harami and now a little doji gap up. This becomes more of your buying. So nothing told you to buy down here, but this is telling you to buy because now the signals are starting to come in. Is there any rule of thumb for ATR? I probably should know what that means. I probably do know what's ATR mean. BKS. Average true range. Nah. We're not trading. We don't care about the average true range for these specific reasons. If I can get something to come up here. Oh, I hope we're not going to go through this again. Okay, well, let's go back to something that we can look at since it's already pulled up tonight. See right here, we don't care what the average true range is. This is what's told us there's new dynamic. We're buying stocks that have new dynamics in it, not what it's normally done. And that's why knowing these patterns and signals are so beneficial, because we visually can see things that are setting up that other people don't even pay attention to. I mean, there was probably a lot of people when they saw this trading like this and it popped up like this, they're thinking, I'm not going to buy this stock. This stock just came out of a range like this and it's up, whatever percentage that is, 30%. I'm not going to buy a stock that's up 30%. Well, shoot, I am, when we can see that it's done a pattern that tells us we should be trading. Let's see. CJ's question about 80% of time, 826. Okay, well, let's do this. Most people I know who swing trade tell me that 80% of their profits come from 20% of the trades. You find that to be, you're gonna make your money. I mean, I anticipate that 1/3 of my trades are going to be losers. 2/3 of my trades are going to be winners. But out of those 2/3, I would say that only 10% of them are going to be the ones that produce the big winners. I'm going to have some that are acting well. I mean, I've got this one that's acting well. But then there's other trades that, after holding them for 3, 4, or 5 days, just aren't worth it anymore. So you're going to make your big money on very few trades. But the nice thing that we have going for us is that every time we put on a position, we're going to be in those situations where we do have the big upside potential. Bah, humbug. What's happening here? Unless I'm doing something wrong. Okay, let me see if I can pull up something somewhere. Nah. Okay, this is not doing us any good. Why are we not getting any, Now, the ones that were already up will come back up. That's just doesn't make any sense. Now, here's also a case where your average trading range right here wasn't telling us anything. It was right here that we got the new message and we could see what the new patterns were. It might. Usually with CQG, which I'm using tonight, sometimes it just comes back after a little bit, and sometimes it doesn't. Okay, let's see what we can do here. We can also do this. All right, hold on. Let me, there we go. All right, now we're back. Okay. PKS. Well, if that ain't a fine howdy do, it's faked me out. Okay, here's that little double doji setup. Notice the slow curve on ECYT, starting back up pretty strong. There's your bullish engulfing. Stochastics heading up. 50 not at its resistance anymore. I'm going to keep plowing right through as if like this is going to act like it should. Well, shuzzbuts. Oh, there it comes. Here's that what I call the stutter step. Nice little kicker signal. Let me make this bigger. Consolidates and then starts back up again. That was kind of a little stutter step. But notice what the stutter step did. After the kicker type signal, consolidation, now they're back up above the T line. This tells me we're at least coming up to the 50-day moving average. Okay, we're skipping around here a little bit because we're waiting for the charts to come. There we go. Here's your best friend. Your doji followed by a gap up, coming up out of the oversold area. And you're right here at this level. This makes it very simple. If this opens positive, what's it telling you? Obviously, first thing it's showing you is that the best friend is still working. Confirming, telling us the 50 is not acting as resistance, and probably telling us that this is not acting as resistance. This is where you can get the pop. Why is this a pop versus anything else that was kind of discouraging in here? Because we've got a doji gap up through the moving averages. That little piece of information alone will keep you from getting into some sluggish trades to get into a strong trade. Oh, Jay, which one were we looking at? That was ECYT. This is a kicker signal. No, that wasn't the right one. What was the other one that we were looking at? HIMX. Little kicker type signal. A doji, spinning top. Then notice where it closed here. Let's make this bigger. This wasn't quite a signal, but now you've got kind of that stutter step that's keeping you up above the T line. This over on some other charts was actually a kicker signal. True kicker signal should open at or above that open, or that open going this way and going in the opposite direction. And so that's why ECYT has a nice little kind of that double doji Notice the consolidation. The consolidation was indecisive, stayed above the T line, still a slow curve. The slow curve is a very high profit trade setup because it's telling you there's a good possibility they're going to start popping it. This is just kind of that investor sentiment building up. We made some good money the other day on ABFS because there's a bullish engulfing signal, slow curve, and notice what they did. They gapped it up above this level. Notice what they did from here. They gapped it up, nice strong up move. Gapped it up. I bet you're going to be in a 45 degree, the same trajectory as this trend right here. Okay, ECYT, where if this is open positive tomorrow, where wouldn't I want to see this close? Probably wouldn't want to see it close halfway down this candle or below the 50-day moving average. That's telling me that there's sellers coming in. What do we expect from this this type of pattern? And this is where your expectation and knowing what it shouldn't do help you with your stop loss. If this is a breakout, I don't want to see it close back below the halfway point of this candle. That tells me they didn't break it out. It's supposed to be going this way. So you just pick out a logical spot. So if this opened higher tomorrow and came back down here, you have a dark candle as your stochastics are approaching the overbought area. That's not what we're looking for. We're looking for the results of these rounding bottoms to go higher. All right. Shoot, I was going to try to get done. There's a lot of J-hook patterns. This is what we call a J-hook. Moves up, pulls back indecisively, curls back up. This is the type of situation right here where you can see all the elements adding up to be in the right place at the right time. Bullish Arami, little gap up toward the resistance level. This one was also very simple. Stochastic still heading up. If this opened positive after this candle, what's that telling us? Telling us that this resistance level isn't going to be there anymore. If this resistance level isn't, more than likely this resistance level isn't. That's where you're going to get your big price moves. So what we're trying to do is anticipate with the individual signals, confirming our patterns, and then the confirmation of what everybody else is watching, breakout situations. And let's see, what did I just do? That was CVT. That was the other one, CYTK. J-hook pattern setup. Nice strong price move. Pull back. Notice the T-line. Got a bullish Arami that told us the selling had stopped. Now we got almost a bullish engulfing signal, but it's basically telling us that they're taking it back up because they're not coming back down through the T-line. If this is my wave 1, I expect the same out of wave 3. And ALNY. There's that slow curve. Doji. This is why you want to know the simple rules. Which direction are they going to move it after a doji? They're going to move it in the direction how they open it. If they open this positive, pretty much telling us they're breaking through this area. In this case, they gapped it through this area. That tells me I'm probably going to at least have a 45, which was the same magnitude as this one right, or this trend right here. So all this was consolidation during an uptrend. Now they're back up to the uptrend, ready to go some more. Wave count is wave count is 1, 2, 3. Just here's wave 1, here's wave 2, here's wave 3. If this moves up strong and starts selling off, and it starts showing another wave pattern like this, then this one becomes wave 1, wave 2, wave 3. I'm not in it for an Elliott wave count, wave 1, 2, 3, 4, 5 with an ABC retracement. I just want to know what's happening right now because the length of my trades, usually 2 to 10 trading days, I'm not waiting to go through wave 2 for wave 3. I'm looking for wave 2 to be over and wave 3 to start. When this one's over, I'm out of it. But then if it starts another wave, I want to be back in. What is the difference between slow curve and scoop? Scoop pattern has a flat handle to it. Where you can pretty much see that it was trading flat, then it pulls back and does that little scoop action. Whereas a slow curve doesn't necessarily have to have that flat handle. You can see this is kind of rounding, but it doesn't really matter. It's still the slow curve, and it's still basically the same thing. It doesn't really matter what you call it. As long as you can see what the action is, whether it came off a flat handle or you're still getting a slow curve, this is what we're looking for here is the breakout. Candle trader, those slow curves are the ones I go after first because I know two things are going to happen. Either they're going to pop it big or they're going to fizzle. And if they fizzle, I'm right back out looking for the next one to pop pretty big. Okay, let me see what else I have here. ACRX. J-hook type pattern. Notice where this came back to today. Right smack dab to the T-line and the 20 and took it back up. What did that tell us? Told us they're not bringing it back down through the T-line. We've got a kind of a J-hook pattern setting up. So if they open this positive, what's that also telling us? Telling us this probably this level right here is not going to be resistance. They're going to take this one up higher. Oh, slow curve. All right. Scoop handle holds ice cream better than a slow curve. That's right. Yeah, biotechs are somebody's going after them pretty hard. Okay, SCTY. This is observe the obvious. When we can put as many elements of buying, notice what this did with the 50. It moved way away from the 50. Came back through the T-line. Where was the next target? Probably back to the 50. When we got to the 50, were they buying or selling? We can see much easier that there was a Morningstar signal here and a close above the T-line. This tells me I want to be buying because now I've got a wave 1, a wave 2 to an obvious support level, and wave 3 starting. What's my wave 3 potentially going to? Well, if this is wave 1, which I can't imagine how many points that is, that's about $30. If it goes from $30 from this level, this tells me we should be up in the almost to the $70 range. This becomes a very good trade because, again, you can put as many elements, a ton of elements, buy signal right on the 50, a close above the T-line, stochastics coming up. You can see the waves. So this puts as many. When I'm trying to put on a trade, I want to see that I've got tons of things going into my favor. The more I can find, Morningstar signal, a little kicker type signal off the 50. This tells us immediately what they're doing at the 50. Over here, they broke through the 50, and where'd they come back to see if it was going to test for their support? Right back to the 50. And how did they know we were supporting? Because they did a bullish engulfing signal right on the 50. There's other techniques that may have to wait 2, 3, 4, 5 days to know that you're back in an uptrend. We can see immediately what the signal was. There's a bullish kicker type signal closing above the T-line. What do we want to see the next day? We want to be buying the next day on bullish confirmation. Bill, that could be true, but we don't care. I may not be owning biotechs in 4 days from now or 7 days from now. Well, yes, it's been channeling sideways, but where did the buyers start coming in with aggressiveness? As soon as they hit the 50-day moving average and it did a buy signal. Was it to buy here? It could have been. Was it a buy over here? Could have been. Was it a buy here? Definitely, because that told you that's where everybody's waiting to see what to do when it got back to a major support area. Why? Hit the 50, did a bullish harami, has now done kind of like a flutter kicker setup, and we're above the T-line with a scoop or a J-hook type pattern, mini scoop type pattern. If it opens positive, it's breaking through this level. Just has all the elements of being in the right place at the right time. AMRI. What's supporting this? The 50-day moving average. Where are we now? We're above the T-line. Stochastic's starting to curl back up. Where did we close? Right about the last resistance level. If this opens positive, where are we probably moving to? We're probably starting the next wave up. Again, just putting the probabilities in your favor that we're in the right place at the right time. IMOS. Not a scoop pattern, but it looks like a scoop pattern. Flat handle. The handle doesn't have to be exactly parallel. I mean, there was lots of indecision right in here. Then the scoop. Now what do we got? The slingshot effect that's taking us higher. Let's see. We did OSTK. SAIA. Where is this bouncing? Right off the 50-day moving average with buy signals. Little inverted hammer, doji, gap up, bullish. And where are we sitting? Right here on the breakout level. If this opens positive, what's that tell us? This level's not acting as a resistance. Stochastic's coming up. Where can this move to? Probably back up to the same trajectory as when this long consolidation started. I'd say I'm not ignoring questions. Let me get through a few of these, and then I'll come back and hit the questions. Right off the 50-day moving average, there's your little consolidation, double doji, gap up, starting the next wave up. Maxwell, right off the 50-day moving average, gap up through the 200. If this opens positive, there's our fry pan bottom. There's our strong price move. There's our pullback, J-hook pattern. There's wave 1, starts wave 3. DDD, not real clean, but it's bouncing off the 50. There's that little morning star type signal. They can't get it back below the 50, and they're now back up above the T-line. If you're buying where we anticipate it's going, well, first target should be testing this downtrending channel. If it breaks through there, now we have wave 1, wave 2, wave 3 in progress. And that was DDD. And Sohu. Sohu gapped up above the T-line but came right back down. Stochastic's coming up. Which direction should we anticipate this moving? Positive. So if we own this or bought it today on positive trading above the T-line, it needs to open and stay above the T-line, preferably trade positive. If it comes back down through the T-line, you close out the position because it should be moving in this direction. And this is not a terrible day. This is they opened it higher and brought it down. It was still trading up. Stochastic's coming up. But we need to see that the bulls are still there and they take it back up again. All right, Sam. Okay, here's a few that look good to me. GTN. There's your wave 1, kicker signal. There's your slow rounding bottom. And how's this next wave starting? With a doji gap up. So you have a slow curve, doji gap up. That tells you you're going higher. Where could you possibly go here? If you take this line up here, you could probably have another price move of that magnitude. If this one moved up, say from here to here, from 4 to 7, this could be from this level to, say, 7 or 10, 7 to 11. That would put you right back up on this trajectory right here. Nugget, another good-looking chart. Let's make this big enough where we can see it. Nugget, notice what it's done. Stochastic starting to come up. You had a left-right combo, which is a good, strong signal. You had a doji right here on the T-line. Makes this very simple. If they open this positive, I wouldn't doubt if they're going all the way up to at least fill this gap, which would be the same magnitude as this candle right here, or a perfect doji sandwich. And SPPI. Not anything dramatically exciting because it's caught in this downward channel, except for the fact that they've kind of gapped this up through the T-line. If they open this positive and they get broken through this level, then I think you're going to have another good strong wave to it. And we did ECYT because it did a double doji, rounding bottom. This one could be taken off pretty strong. RAX also has a slow curve. Where's the first viable target? Right here at the 50. Once it gets up to the 50, even if on an option trade, if it fails here, you're going to make a little bit of money. If it breaks through, where can you expect to go from there? They've got a gap to fill back up in this area, so you've got a good potential for upside. Now, get a lot of people watching UNXL. It has fallen from 38 to 14. Is it time to buy? There's nothing telling us that it's time to buy yet. There's lots of indecision. I would rather wait to see what the decision is. Could be a gap up. I'd rather buy it up here after a big breakout, or if it gaps down, short it, knowing that they failed at the T-line. So right now there's nothing telling us what to do with this one, so don't do anything with it. Remember, we've got 7,500 trading entities out there to work with. If you've got one that's not telling you anything, go on. I never did go over to the UNXL office, Mike, only because once I got back to Houston, I was busier than a one-legged man at a butt-kicking contest. I just didn't get over there. Okay, a few of the short side. Stay short on LPX. Even though we're trading flat, it hasn't gotten up above the T-line. So it's still got two alternatives. At this point, if it came up through the T-line tomorrow, I'd close out a short position. If it opens lower tomorrow, I'd consider still going short on it. Yes, it is near. It was near the house. It's probably within a mile or a mile and a half of our house down there. Let's see. ALJ had a perfect execution setup. This one we were recommending to go short on weakness. But notice it opened positive and started trading up. All right, we're in an oversold area. Does that tell us that our uptrend starting? Could be. But we also had a J-hook type pattern to the downside. So very simply, if they opened here and started trading up, all you had to do is put a sell stop right down here where it closed the day before. Because if it came back down through there, that told us there was failure, and they're still selling. SPN opened positive and traded up. Where would be a good place to tell us that the sellers are in control? Well, if this opens lower and especially comes down through the close of Friday, that would tell us they failed again at the T-line. They're still taking this lower. Where's the potential target? You know, your first target is right down here, the bottom of this channel. Second target is down here at the 200-day moving average. Zales had a good bullish chart a few days ago. Now we've got information with a left-right combo and a close right on the T-line. If this opens lower, what's the information we're being shown? Number one, a left-right combo is a strong sell signal, evening star type signal. Even though our stochastics are not up in the overbought area by any imagination, that's by any imagination. Who's imagining? If this opens lower, it's telling us they failed. Where they failed? In this uptrend that had a high, came back, and failed to get to a new high. What's that make our likely target? Probably back down here to the 50-day moving average. So if this market opens up weak tomorrow, and this opens up weak tomorrow, at least you got something to go after and make some money even on a maybe a 1 or 2 day, even a big down day, one big down day. VCRA came up here, did a dark cloud, gapped down through the T line. Notice what it's not been able to do since then. Get back up above the T line. Guess we should make this more pronounced. Where could this possibly go to? Well, there's a little peak right down here, but your major support level is down in this area. And IOC, after the bigger the signal, the more compelling your trend is going to be. See if I can do this. Now notice what's happened. Downtrend, downtrend, bounce back up. This is why I always say, see what it does once it gets to the resistance level, whatever that resistance level may be. It came up here to the T-line and did a doji. Came back up to the T-line, failed. Tried to get back up to the T-line, failed again. If this opens lower, what type of configuration or what pattern is it setting up? Oh, wave 1, J-hook, bearish, wave 3 getting set up. And that was IOC. Rovi, which made us some good money going up. Notice what we did here. Bullish day, gap down, doji. They have not been able to get this back up above the T-line. Another day where they took it up, failed right at the T-line. If this opened lower, even though you're close to the oversold area, just because you're in the oversold area doesn't mean your downtrend is over. That means your downtrend can stay in progress for another 2 months. If this started trading lower, now we have a wave 1, wave 2, wave 3. Where's wave 1? What's that equivalent to? Probably wave 3 that would take you down here to the 200-day moving average. Okay, that's about all I got tonight. Let's see. What, the Japanese yen. This is why I shorted. Now, here's the reason you shorted the yen. First of all, on the bigger picture, oops, let's do this. Where are we? In an uptrend or a downtrend? That's obviously a stupid question. We're in a downtrend. We had the possibility of having a fry pan bottom breakout, which it did. We had a nice little move here. Now, we should know what happens after a fry pan bottom move that starts pulling back. We should have a J-hook pattern, which means it should support on the T-line, and where, if it did, where's our next target? Probably up here to the 200. However, as we can see, when they came down through the T-line, there was nothing to show there was any buyers, and there still isn't anything showing there's any buyers. We're getting toward the oversold area, but notice how long you can stay in an oversold area. You can stay there for 3-4 weeks. So right now, you just stay short until you see a buy signal and a close back above the T-line. All right, yeah, well, let's see. All right, so if there's any questions that I've missed on the up here, go ahead and redo them. These are questions, not individual stocks. When I tell Jim to do the double line, then we'll do the individual stocks. Most of the trading, and again, stop losses. If I'm short here, where should my stop loss be on this? And this is for any trade that's, say, on a short side. I'm getting toward the oversold area. Where should this trading not go anymore? It shouldn't go back up above yesterday's trading. If it came back up there in the oversold area, that tells me the bulls are starting to pick up strength. Is that the bottom? Not necessarily, but it's probably the majority of the bottom, and if that's the majority of the bottom, I want to be out and moving on to something else. What is your favorite scan on TC2000? My scan is very simple on TC2000. I don't know whether I can do this. I probably can. Or get most of the chart in here. My basic scan that I start off with each night, is this one right here, where I go down and I do my trading universe, which is stocks greater than 5, trading more than 200,000 shares a day, and then which ones had the biggest percent price move. Because I can recognize, now this one's on the bearish side. So if I was looking for something to go short, I would start from here and see which ones would be the best ones to go short. And if I can flip down here, probably at about this speed, if I see something I think is a good short, I just flag it, and I'm going to put it into one of my into my sell watch bucket. On the other hand, if I think the market is heading up, I go to the other end and I look at the ones that have the biggest percent price moves to the upside. And by the time I go through probably the first 100, I'll come up with 4 or 5. And see right now, this one, Best Buy, little kicker type signal breaking out through there. That tells me there's more upside. This one is looking like a J-hook pattern. So I can go through and probably within the first 100, I'll come up with 6 or 8 that look very good. I usually go through, and because my universe is 2,700, I usually go down to 270. I figure if I can go through 10% of the stock prices, I'll come up with some good trades. Biggest bang for your buck is money management, exactly. If I know, and that's because I know the statistics. If I know that 1/3 of my trades aren't going to work, probably 80% of my other trades are going to be decent. But what I'm looking for is those trades that come out of a pattern that give me a big profit. And so I'm not trying to hit every big trade. I mean, we'd love to hit big trades. We just need to know what the results are of price movements. And when we see price movements setting up, which one did I think was setting up? There was something sitting with the, was it HGG. This has all the elements of a doji sandwich. If this opens positive tomorrow, this will be probably one of the first ones I go after because I expect a doji sandwich, all based upon the patterns we're seeing here. Was it GNT or GTN? Yes. Wave 3, coming out of the slow curve, gap up doji. I like that one. I also like DANG, which looks like it's doing a strong J-hook pattern. Did a little kicker type signal back up above that line. Okay. Do you change your stops daily based upon the stock? Yes. Sometimes it's still very simple that if I was owning this one on this day, let's say I was buying, my stop would be right here. It moves up here. Where do I not want to see this trade at all? Back below here. On this day, it needs to open positive. Where do I not want to see it trade? I don't want to see it trade back below the low. So I pick out spots that tell me where should this not trade. Now, if there was a dark day, was that a sell signal? No. But where would be a good, safe place to have your stop? Shouldn't come back below the lows of these days and or below the T-line. So I make a close below the T-line at this level, my stop. Now I make another decision up here. They gap it up, didn't do a sell signal, but what do we expect when we see a gap up in the overbought condition? We want to start looking for a sell signal. How did doji? where's a very simple place to put a stop up there? It shouldn't come back down. If this is still moving up positive, great. If it comes back down through the low of the doji, away after a gap up, away from the T-line, where is it likely going to come back to? They're probably going to come back to the T-line. Why risk holding it all the way to the T-line? Close it here. If it did a J-hook pattern, you can always buy back in. What we don't want to do is hold on to something like this. So I'll make a decision every single day of where I want to have my stops. That also includes the fact that I've only got through the different accounts, I may have a total of 14 or 15 different positions on. Usually with each portfolio, not any more than 8 to 12. But there's a few that most of them overlap, some of them don't. But in 16 trades, I can go through 16 trades in a matter of a minute. And if there's anything that looks a little bit doubtful, I'm trying to think of something that might look a little bit doubtful. Oh. Yeah. Let's say this one looks a little bit doubtful. This is SBGI, which I have because it did a J-hook pattern after a kicker type signal, breaking out through this level, still in an uptrend. What am I looking for? I'm hoping for something like this to happen. But it's had a couple dark days, so I know what this needs to do. This needs to open positive and trade positive. I don't want to see it trade back down through here or this level. That's not a good sign if we've got dark candles and then they're starting to trade it back down below the T line. I'll be ready to close this one out and move on to something else. Do you take stops out during the first hour? Do you take stops out? Do I put the stops in the first hour? Victor, not usually. Usually I'm doing my stops on where the trend should not move to the night before. Then once it opens up the next day, then I've got a good idea where it should move to during that day based upon how it opened. And Victor, I haven't forgotten about you. Let's see. If you get something like Pandora, no, that doesn't look doubtful yet. It's got a shooting star. So if you know what, I shouldn't say doubtful. Yes, that looked like it was coming back. What should this do tomorrow? This should at least trade flat or positive. If it opened lower and started trading down, where do you think it's going to go after they gapped it up in the overbought condition and did a shooting star? More than likely, they're probably bringing it back to the T line. And this is where I mentally had to kind of get myself educated with, boy, what if I sold it here and it just came down here and then it took right off without me? Well, number one, the probabilities from the Japanese rice traders say if it opens lower in the overbought condition, it's probably going down. If it comes down, I can still watch to see if it starts coming back up. I can always buy back in. But I don't want to go against the probabilities. How do you handle stops on options based upon the underlying price or the option price? No. On the underlying, the reason you bought an option was based upon the underlying price. So the reason you sell an option is based upon the underlying price, not based on the value of the option. The option was just a method of buying the underlying position. So if your underlying position is strong, you stay with it. If your underlying position starts showing weakness, you close out the option. Okay. With that, Jim, go ahead and do the double line. Yeah, I get stopped out quite often. It doesn't bother me because I'm going to buy it back in. Okay, there's the double line. All right. In 17 seconds, Jim, do another double line. No, the Japanese race traders did not have overbought and oversold oscillators that I know of. They were still buying or selling based upon just the chart patterns. The first books I read on candlestick analysis also had information in there that told you how to build your little box so that you could put a candle underneath it and be able to see the trade through the rice paper. Okay, all right. Still scrolling. All right. GDX, this one you buy on positive trading. You got that left-right combo. Let me make this bigger. And Google, we're going to have to go through some of these pretty quick because it's a summer night, and I know you all want to be out watching the fireflies. Google, if this opens positive tomorrow, you want to be a buyer. If it breaks through here, you got a wave 1, wave 2, starting wave 3. And HTZ, S.HTZ. Morningstar signal, another one that if it opens positive tomorrow, stochastic's coming up, you're breaking through this downward trend channel, you're going to come back up into this trend channel, this trading trend channel, and move up from there. NIHD, this one, same scenario. They're all right here at this resistance level. Two things are going to happen after doji. They're either going to take it positive or they're going to take it down. If they take it down, you're still caught in this trend channel. So this one is going to move in the direction of how they open it after the doji. MCP. This one, let me make these bigger again. As long as it stays above the 50, this one you want to see open positive and trade positive. Exactly what the gap up told us after the doji sandwich is that they aren't going to use this as a resistance level. They should be acting as support. So we want to see this open positive. Zynga. Nice big left-right combo. You're probably going to see some consolidation, but if I hadn't bought this and I was thinking about buying it, I'd put a buy stop right above today's high. Because if it comes back up through there, it tells me two things. The buyers are still there, number one, and the 50-day moving average, which looked like it acted as resistance today, is not going to be acting as a resistance anymore. OSTK, prime example of a wave 1, wave 2, scoop action, Morningstar signal, doji sandwich, doji sandwich, doji sandwich breakout. Tells me that wave 3 is in progress. Gold. This one needs to open positive and get above the T-line. If it opens lower, telling you the T-line is still acting as a resistance. This one, bullish engulfing after a hammer. Stochastics coming up. It needs to open positive. When you see something close, a signal close right on the T-line, you've got the added benefit that if they open this positive, they're confirming the signal and they're telling you the T-line is not acting as resistance. You want to be buying immediately, and then just use the T-line as your stop by the end of the day. CLNT, another doji. If it opens positive, you can be buying immediately. It's breaking this downtrending channel. If it opens lower, you better be careful. Obviously, it needs to stay above the T-line to stay in it. If it doesn't, you want to be back out of the trade. Price line. There's your little cup and handle. Look for it to break out on positive trading. Amazon. Another one that if it opens positive, notice how it came back down and used the 50. There's your big doji, taking it right back up again. The SPY. This is indecisive in here. It's going to move in the direction of how they open it. If this closes back below the T-line, now the markets are in trouble. So we did DDD. This one you can be buying on positive trading. Bouncing off the 50. Now you just watch to see what it does once it gets to the top of the trend channel. NXST needed to close back up above the T-line, which it did. But it also needs to stay above here. Notice that you've got kind of an evening star signal. If it confirms tomorrow, close out the position. It needs to open positive and trade positive to stay in this one. So we did see T Ruckus. Ruckus looks like it's doing kind of that double doji consolidation. Another one that needs to open positive and trade positive to stay in it. Nokia. This one's not anything that I'd get real excited about. To buy, I need to see another buy signal. You had a gap up, but you're still back. You came right back down into this trading range. I would rather pay $4 for it, knowing that it finally broke out through that level. Tata Motors. Gapped up. This one you can be buying on positive trading and anticipating moving up to the moving averages. Nike. This one I would not be long or short for two reasons. Your percentage move on this one doesn't look very great. And number two, you're not in any great obvious trend. Junkie. I'm trying to figure out a best way to describe junkie. Just not anything that inspires going long or short. This one needs to get above the T-line. The longer it takes for them to come up to the T-line, notice it's not very decisive buying. If they can't get up through the T-line, this downtrend is going to continue. And notice how it's continuing. It had a nice, slow, steady uptrend until they broke through the T-line. All you can say right now is you're in a downtrend until you see a buy signal and or close above the T-line. All right, Frank, see you tomorrow. Bank of America, another one that I wouldn't get real enthusiastic about until you see a buy signal that breaks it out of this downtrend. DRRX, having a hard time getting up above the T-line, but now the 50. Now you watch for the T-line crunch. Make sure you got a lot of volume in this one. But you do have a fry pan bottom. You might have a T-line crunch. If it comes back up through the 50, that's when you want to be buying. U.S. Steel. U.S. Steel is not anything exciting either. It's still caught in this sideways mode. I'd have my money someplace else. And First Solar. This one you can be buying, especially on positive trading, and especially if they close it above the 50. You've got that little doji gap up through the T-line. Now you're seeing support at the T-line, or you saw support at the T-line. That was which one? First Solar. We did Zenga. Did I lose my spot here already? I don't use stops anymore. 9 out of 10 times it takes you out of the trade and then moves higher. Then apparently you've got your stops too close, Bill. You might want to take a look and see where is a good spot to put a stop that tells me that it should not come back through this level. Zenga we did. TLT is at the 30-year or the 20-year. This one you can be buying if it opens positive tomorrow. Then you need to watch this downtrending channel. So if you're buying, watch the 20. If they can break through the 20 now, then you'd be all right. Ford, you stay long on this. There's that kind of little scoop pattern. And where did they bounce it? Right smack dab off the 50. Now they're back up above the T-line, trying to break out through this area. Stay long on Ford. Xerox, can't come up with anything original. Another one that I wouldn't get real excited about. It is in an uptrend, but it needs to break through a lot of junk. I'd almost rather pay $9.75 for it, knowing that it finally broke out of here. Let's see, we did GDX, I think. Yes, the Doji. You want to be buying this one on positive trading after the Doji. GLF, another one that isn't coming up very decisively. You've got a Doji. That's going to tell you which way they're going to take it. If they open it lower, you're still in a downtrend. And AKAM just climbed up above the T line and is staying there. So, and it's broken this downtrending channel. I'd be buying it with the anticipation it's going to come back up to the 50, and then you just have to watch to see what it does once it gets to the 50. BPHM, slow curve. This one you stay long until you see a sell signal. And Loop, slow curve. This one you can be buying on positive trading. I would be breaking out through this area right there. And you can see that obvious slow curve, and you're seeing buy signals in here. Broke through this downtrending channel. If they open up positive, they're going to be breaking through that level. That's a good setup. EXAS, another slow curve with a doji sandwich today. Broke out through this resistance area. Number one. Number two, did a doji sandwich, which means there's more upside. Crocs did a doji, which means if they open it lower, you got to make sure that they support on the 50 because they broke through it. If it opens positive, you buy immediately because you've got your doji sandwich set up. Las Vegas Sands. Las Vegas Sands has to stay above the T line also, or above the T line. If it opens lower tomorrow, you're still in a downtrend. Why would a Morningstar still go up on P? Seems like a Morningstar would be a sell signal on P. On a Morningstar signal. I don't know where the Morningstar came from. Am I reading this right? Why would a Morningstar still go up on P? I don't see a Morningstar set up here. Seems like a Morningstar. No, an Evening Star would be a sell signal. Morningstar is usually down here. This is kind of a Morningstar setup. Goog, did we do Goog? Pretty sure we did. Yes, you want to be buying this. Looking for a breakout. MYGN. Another one that can be bought on positive trading. This little inverted hammer type signal in the oversold area, if they open up positive, it basically tells us the bulls took it up today, then there was profit taking. The bulls open up stronger tomorrow, the profit taking's over, they're still going to take it up. Abbott, stay short until you see a buy signal. I would suspect they're trying to bring it back down to the 200. And TKR, S.TKR. A little scoop type pattern, also that bullish Harami, doji sandwich. This one you can be buying. It just needs to break out through this level to get you into new territory. Game, another one that has to break out into new territory. You don't want to be stuck back in the trend channel. So we did Apple, Baidu, still not a likable stock. This is a big bearish engulfing signal. When it should have been breaking out to the upside, you're back below the T line. This one you can be shorting if it opens lower tomorrow. AEGR, you stay long. You're in wave 3. FCX. Whoops, feeder cattle. They're running it. S.FCX. This one gapped up, used the T line as support, but traded lower than from where it opened. I would, if you're in this, you stay in this as long as it doesn't close back below the T line, which means there's a possibility that it could come back down and test the T line, but as long as it doesn't close below it, you want to stay with it. Here's another doji sandwich setup right off the T line. If this opens positive, you're going to have a doji sandwich, which means you're breaking through this downtrending channel. We did MCP, AUY. Doji sandwich setup, you can be buying on positive trading. ACI, stay short until you see a buy signal and a close above the T line. It's not there yet. And SNSS, that's a good little breakout. Make sure your volume's good. This one you can be buying, but you also have to be careful once it gets up here to the resistance level. Just watch to see what it does there. Goodyear, stay long. It has now broken out through this little downtrending channel on a bullish Harami that almost touched the 50. That's where they were starting to buy. This one you can buy on positive trading tomorrow. Netflix, I would rather pay for it after it breaks through this wedge. I mean, you can see the wedge set up. You also can see that you're at the T line and the 50, but it needs to get into new territory. Otherwise, you can still be stuck sideways here for a little bit without any great energy coming in. REGN, another one that's not real enthusiastic until it gets up above this level. I probably wouldn't want to buy this until it comes up through the 50. FAS, bullish financials, another one that has to open positive and trade positive so it can break out through this level. But they did gap it up a little bit today. Your stochastics is coming up. Probabilities are that they're still taking it higher, which would break out through this level. On the other hand, if they start taking it down, you're stuck back in this trend channel. You got to wait for the next buy signal. Cabela also needs to get out of this downtrending channel. Right now, if you're short, you stay short. I would still use a close above the T line as a stop. M&Ms. Oops, this M&Ms. Oh, pshaw. Oh, hope we're not doing this again. Let's try MTG. Well, for crying out loud. Yep. Okay, just had a hiccup. Mortgage wouldn't be long or short. I'd have a buy stop at 655. If it comes up through there, we've broken out of this congestion area. M&M, all you can do is stay long as it stays above the T line. And TMW. Bug. What is doing this? Jitu, that's what you're going to resolve at the lake. TMW. It needs to get above the 50. Okay, see, we've done most of these. APAM. This one you stay short until you see a buy signal and a close above the T line. Right now, I would not be trading it until it moves one way or the other. Let's see, is that Dow as in Dow Chemical or the Dow itself? This is Dow Chemical, which, notice all the doji indecision right here at the 200. If this comes up through the T line, it's coming right back up to the 50. And Camp, you stay long. Notice yesterday or on Friday, they used the T line as support, took it back up. That's the slow curve breakout. Let's see, silver, right there on the T line. It's going to move in the direction of how they open it. And where did I goof up here? Gold. Oh, Okay, GEVO. This one you can be buying on positive trading. Just make sure your volume's good. And Occidental. Occidental is still not anything you want to go after. Probably either long or short. Magnitude of the move isn't all that great. Now, if this starts trading lower, you can probably be shorting it with the anticipation that you do have a blue ice failure. There could be taking it back down to the 200. And CHK, Chesapeake, you could be buying. That's the message here was it bounced off the 200. They gapped it up through the T line. You stay long until it closes back below the T line. And Moo. Okay. Moo, another one that you don't want to buy until you get it up above the T line. One. Number two, you still have to contend with this downtrending channel. Let's see. We did Voodoo. We haven't done Boeing. Boeing. It's going to come back up to the, if you see a trend like, notice what the trend does. See if I can, trend comes up, consolidates, comes back up to what the trend was, consolidates, come back up to the trend, consolidates, come back up to the trend, consolidates, will come back up to the trend, and then continue higher as long as it stays above the T line. Oh, Jim doesn't have a watch. Okay, let's see. This one, the UNG Natural Gas Fund, nothing to tell you there's any buyers in here yet. And Starbucks. Another one that's probably going to come back up to the trend and continue the trend. Stay long as it stays above the T line. Okay, got happy news today, all right. Thing is trading up. The T line, Joseph, is the 8 exponential moving average. Just a very simple, probably something that has to do with natural price movement, like Fibonacci numbers. It just works very effectively with candlestick signals. And if you see a buy signal and a close above the T line, you can stay long until you see a sell signal and a close back below the T line. Let's see. Did we do Lulu? Lulu, wouldn't get real excited about just yet. It still needs some more upside pressure. And Coors, this one needs to open positive. You're kind of breaking this downward trend channel, but we've got a shooting star. You're not in the overbought area, but it needs to open positive and trade positive to stay in it. A few more. GPT. Oh, is that what we want? GPT. No, Armin, I don't know what to tell you about that. If that's apparently it just opened back up. Don't know what to tell you there. Yeah, always use stops. It doesn't cost you anything to use stops. Is there a good education on buy, sell stops? Tammy, I think we've got a good trading CD on the site somewhere. You might want to pick that up. When you get stopped out of your option position, what is your typical percent loss that you incur? Oh, Mike, it could be anywhere from 10% to 60%, all based on the chart. But again, for every time I get stopped out, hopefully I've made 2, 3, 5, 7 trades that have made money for me. Maybe a little bit, maybe a big amount. So the percentage loss isn't based upon each individual trade that you try to restrict it. The percentage loss or gain is going to be a function of what is your upside risk, your upside potential versus your downside risk. So if you see a chart that if it breaks out, you could have a 500, 600, 700% gain, and if it doesn't work, your percent loss might be 30%, 40%. You're going to be looking at the risk-reward factor. If the trade works, I'm going to make some big money. If it doesn't work, I take my losses and go on to something else. Okay. All right. Let's call it a night. Only because why use a buy stop? Because if something is moving in the direction of what we expect it to, let's say I want to buy this. If it comes up through whatever today's high was, 775. I put a buy stop at 776. That tells me if they open this positive and they move it this way, I want to be buying it when it breaks out or it confirms that I want to be buying. I don't want to have to sit here and try to buy it. If it moves through the area that I think it should be moving and confirming, I want to be buying immediately. Okay. Let's call it a night. I've kept you up late. Go out, catch some fireflies. You give us what stock to buy and at what price with positive wealth. Why do you buy after the opening range or right now? You give us what stock to buy and at what price with a positive open. Do you buy after the opening range or right on the open? Depends on which way the market is opening. Let's say we expect the market to be moving up tomorrow. Not necessarily a truism right here, but let's pick out one. Let's say right here we expected the market to open higher and trade higher because everything was still moving up in the right direction. And then the stock that I see that I like is opening higher. I buy immediately. The other side is, let's say the market opens slightly lower and the stock I'm looking at is higher. I don't need to jump in. I can see whether the market's going up or down and then jump in. So sometimes I'm buying immediately, meaning probably within the first 2 or 3 minutes. Sometimes I'm buying or selling after 40 minutes after the market does move higher. So if we're seeing, if the market futures are up for tomorrow, that means we're staying above the T line. But remember, the futures are a function of investor sentiment. That investor sentiment right at this moment might be positive, but 8 hours later or 12 hours later, whatever time we get ready for the market open, those futures could be a lot different. Okay, with that, everybody have a good summer night. We'll see you in the chat rooms tomorrow. Thank you for showing up tonight.